Hey, this is Jim Sharpe along with David Fischer, the CEO, the founder of Landmark Capital. David, you and I have talked about a lot of different things through the years. I wanted to hit on the stock market because every morning on my show, I announce the opening of the stock market. We talk about the numbers there. The market seems to be doing pretty well, but there is a gap between Main Street and Wall Street. Is that shrinking or is that expanding?
Well, I reported last week that retail sales crashed most ever, and expectations were around 12% is what they thought it would come in, but it came in at 16.4% and dropped in retail sales were the biggest in a month in history. Also
Yeah.
last week, industrial production plunged the most ever in 100 years, Jim. But this week, more bad news as far as the eye could see. Jobless claims again came in. 2.1 million were filed. This brings us over to 40 million people that are unemployed. So basically, every one out of every four Americans are out of work. So this is not reflecting of the stock market. And when you look at home sales, they also collapsed. Estimates were going to be 15% less than the previous month, but it came in at 21.8%. We can just keep going on. Boeing slashing 6,700
Yeah.
workers. They're saying the recovery in the airline travel industry is going to take years, and Amtrak laid off 20% of the workforce and asking for a bail-in of $1.475 billion. Forbes, though, told the real story that America is on track for a $4 trillion deficit, and the CBO says it's actually $3.7 trillion. So the economy continues to take a nosedive, but the market is doing fairly well. So we'll see what happens, but we're seeing definitely a lot of stimulus coming out by the Fed. Japan just announced $1 trillion stimulus package this month, and the previous month they did another $1 trillion already. So it's still not helping globally. We're still seeing global defaults, and a lot of them are happening aggressively in the United States.
Yeah, I got a lot of corporate defaults. One of the other things I reported on is that we saw the worst quarter for GDP, gross domestic product, that we've seen since the very end of 2008, of course, as the Great Recession started. So things are not good. Let's talk a little bit more about corporate defaults. What's going on with those?
Well, a guy named by Stanley Druckenmiller, he's a hedge fund, a billionaire. He's observing these underlying problems, and said we're shifting from illiquidity to insolvency, and he's saying defaults are coming in epic proportions. He's not the only one. Goldman Sachs came out and said that the default cycle is now completely started. We're hitting a 6-year high, and they're growing. I mean, just recently, Neiman Marcus, has been around for 112 years. Crew, J.C. Penney filed bankruptcy. And Goldman said, quote, there's going to be a growing concern. They thought there was going to be a bad default, but now since the virus, it's risen dramatically, causing sharp declines in the retail sector. Commercial real estate is being affected, gym, lodging, healthcare, travel. I mean, 30% of retail companies haven't paid the rent in the last 2 months.
Wow.
So Goldman Sachs is finding that the conventional wisdom that banks might be safe, but we're also seeing delinquencies rise and defaulting that could put banks worse than what we saw in the Great Recession in 2008 and 9, unless, according to Goldman Sachs, we have this big V-shaped, remarkable recovery, and they're certainly not saying that's going to happen.
Yeah, no, I think that's a little bit of wishful thinking, or if not a lot of wishful thinking. You mentioned banks. They really got hit hard in the Great Recession, and they got bailed out, of course, to the tune of billions of dollars. And the Fed tried to help them out, and they've tried to do the same with the economy right now, but there's not much left in their bag of tricks. I mean, basically, they're almost at this point, I know this is a bit of an exaggeration, but at this point, they're basically paying you to borrow money from the Fed. I mean, interest rates can't get much lower, can they?
We're at a quarter of a point, Jim. There's been talk from President Trump saying we got to have negative interest rates, although the Fed is quickly fired back multitude of times whenever that's been discussed by President Trump and others. That's not even on the table. So banks on the outside look like they're fine, but Larry Fink of BlackRock who manages $7.5 trillion, says different, expecting a cascade of bankruptcies to hit the American economy. And it's going to affect banks, he said. But I think a bigger thing is not being really talked about too much, although I've been saying it on national radio, and that was a huge, probably the biggest announcement in my career in 26 years was on March 26. The Federal Reserve, check this out, announced that banks don't need to have any reserves, zero cash reserves.
That's crazy.
I mean, think about that. In 2008, they had to have about 10%, and they still were in trouble, and they still need bailing out. If we have anything close to 2008, they're not going to have anything to fall back on. So, this is, we haven't really talked about this together recently, and except for a few years ago, but it's coming back full circle, this whole idea of a bail-in. I just did a YouTube video. It's going to be up, a 2-part series on the bail-in. So we don't need to go in depth on that today, but, ironically, I just read 2 stock newsletters I subscribe to that, tell you what stocks to buy, Jim. They both were talking about a wealth tax, a cash grab. That's the bail-in. They even one of the 2 reports it called a bail-in. So this is right why it's imperative. I'm not saying we're going to have it, but it certainly was set up by law in 2010, the Dodd-Frank Act. But this is why it's so imperative to have some gold in your portfolio, and it's done extremely well. But it also would save yourself grief from a bail-in, because the numbers are, according to the Wall Street Journal, 56 to 71% a wealth tax or wealth grab or seizure of assets. Call it what you want. It's the same thing.
You and I were talking at my radio studio yesterday about this, and that is that now is really the time to buy gold because of all this. And you basically said it's always been the time to buy gold when you have a situation like you have right now, where trillions of dollars in added debt, trillions of dollars added to the budget deficit, the gap between what the government will receive and what it will pay out, that's $3 trillion, and the Fed printing money like crazy. It's just that kind of time to buy gold, isn't it?
Yeah, $3 trillion of national debts from the beginning of this year till now. The budget deficit at $4 trillion. The Fed balance sheet is at $7 trillion, was at 3.8, and it's growing. Some say it's going to reach as high as 12 trillion, 9 trillion by the end of the year. And we're going to add probably another 2 trillion to the national debt. I mean, there's red as far as the eye can see. And this is a phenomenal environment for gold. It does very well historically. It's up year to date 12.4%. The stock market Dow is down about 14.5% year to date. So, there's never been a time where gold is a bad asset to hold, but there's been some phenomenal times, and we're definitely in that and approaching even greater times, because they're not done throwing money at this thing. Yeah. And, neither is the government going to stop spending. We all know how that works. But right. This is like on steroids, Jim. I mean, there was a Bank of America analyst, Michael Wieldmer. He said last week that gold, he could see it at $3,000 in 18 months. And another analyst, Grievous Williams, said $3,300 gold by the end of the year. So that's like we're in a major bull market.
We're talking about almost doubling the price of gold, right?
I've never said that. I've never heard any analyst say that. Yeah. That's a true analyst. I've heard a lot of gold bugs who own a gold company or things that they have a benefit by saying it. But these are analysts. I've never heard. There's been about 10 billionaires suggesting you need to have some gold, and 4 prominent billionaires who run hedge funds are saying you got to have gold in your portfolio. So I've never seen this type of environment, and I think it's unfortunately only going to get worse financially speaking in the short term, and who knows, maybe the long term.
Yeah, boy, we don't hope for bad times, but bad times come, and it's best to be prepared. And the best way to prepare your retirement funds is to get some gold in there. So, you know what? Here's the great part is David and I have known each other for a long time. I've been around since David started Landmark Capital, and David sells gold to people all over the country. But if you live in the Valley of the Sun, as we know it as, Phoenix, you get to go in and meet with David personally. And trust me, it's a guy you want to meet with. So give him a call at 602-287-9200. That's 287-9200. You can stop by the website, which is landmarkgold.com. And they should also subscribe to your YouTube video series, David.
Yeah, absolutely. They just go to YouTube and type in Landmark Capital. You'll start to see some of our videos there. Push the subscribe button. If you like what you're hearing, give us the thumbs up and ring the bell so you get notified the next video comes out. By the way, we also do all the other metals, silver, platinum, palladium. We can talk about those. And you also can do this in your 401k IRA and roll over and take possession of your metals without a tax liability. We have a report on that also.
That's awesome. All right. Well, looking forward to our next chat, which will be real soon, David. Thanks.
Thanks, Jim, for having me today.
You bet.